Okay, so the numbers are in for the month of December. Let's take a quick look and see how the market shaped up going into the new year. Taking a look at the 6-month average price table, the market definitely softened through the back half of the year. We had a relatively slow December, given what we normally see at this time of the year. The market's definitely not in a crash, but it is a slow grind adjustment that's mostly driven by inventory levels and buyers being cautious going into the slower months. So what we saw for the month of December, active listings was sitting at 2,544, which was down pretty significantly from November. Months of inventory remained relatively stable at 4.3. And what we saw is average prices declined about 3.63% relative to November. And that brought our total average to negative 9%. So it will be interesting to see what happens going into the spring market. There still is a level of caution that buyers are taking into account when thinking of entering the market. But with inventory increasing and prices decreasing as well, it's definitely creating a more attractive environment for buyers who are looking to get into the market. So what market are we currently in? Again, based on the segment, it's usually relatively different. Detached homes, average price is sitting at just under 800,000. The year-over-year change is sitting at just under 1.2%. And months of inventory is at 4.3, which is increased relative to the previous month. Definitely a balanced market, but I would say there's more of a lean towards buyers. Depending on the pocket you're in, Barhaven, there's tons and tons of inventory. Other areas, there's definitely less inventory and more demand. So it really depends where you're at, but overall, I would say it's a balanced market that's relatively leaning towards buyers. So townhomes, one of the healthier portions of the market. The average price is sitting at just under 550,000. Year-over-year change is down about 2.7%. Months of inventory is sitting at 2.8. We saw relative to last month is months of inventory has actually declined. Again, we're in a balanced market. What I would say, in real time, we're seeing some of the buyers pick up the inventory that has been sitting for some time, and they're able to get great deals on those homes and pick up some properties at prices that weren't available last spring. Condos, average price is 401,465. We're down about 5% year over year, and months of inventory is at 7.9 months of inventory, which signals a very strong buyer's market going into the new year. So taking a deeper look at detached homes, we're seeing active inventory be down about 31% year over year. Average price, you're down about just under 1.2%, and months of inventory have declined from 5.6 to 4.3. Median days on market, we're sitting at just about 31 days on market. What I would say, detached homes are definitely stabilizing, but negotiating power is shifting more towards buyers. Homes that are priced correctly will still sell, but testing the market is definitely not a strategy I would recommend for sellers because buyers have lots of options at this stage. And the buyer that may have purchased your home will quickly go to one of the other homes that are available on the market, and you could miss out and then eventually be chasing the market trying to sell at higher prices. So looking into townhomes, again, one of the healthier portions of the market. Active listings are down about just over 7% year over year. Average price we're sitting at is just under 550,000, which is down 2.7% year over year. Months of inventory is interesting because we've actually declined relative to last month. Median days on market is at 35. It still is a balanced market. It's definitely not shifting more towards sellers, but what we are seeing is buyers are starting to step into the market, pick up some of those homes that have been sitting on the market for a while, and first-time home buyers and downsizers are really keeping the demand alive. So finally, looking into condos, this is definitely the weakest segment of the market. Active listings are at 617 active listings, which is down about 17% year over year. Average price is sitting at just over $400,000, which is down about 5.23% year over year. The big number to look at is the months of inventory. 7.9 months of inventory, we're in a strong buyer's market. Days on market is sitting at just over 50, which tells us that a lot of the homes that are on the market are not priced where the buyers want them to be. So there's definitely a gap if you are looking to buy. Given the level of options, it's worth sending some offers to some of the homes that have been sitting on the market for some time and seeing if you can get something at a great price. What I would say is we still haven't seen the return to work for federal workers in Ottawa. Going into the spring, it would be interesting to see how much that will affect this market and whether that'll spur some additional demand. So overall outlook on the market, if you are a buyer, what I would say is you finally have time, choice, and negotiating room. If you plan to own for 5+ years, it's a great time to get into the market. There's great options for condos, townhomes, and even if you're looking to upsize, there's some great options for detached homes depending on the area you're looking for. For sellers, what I would say is going into the new year, homes are still selling, but strategy matters most right now. Price correctly, present it beautifully, and when you're coming up with your price, expect that there will be some negotiations happening. Buyers may come a little bit lower than what you're hoping, so take that into account when coming up with your final number.